strategy at Sarona Asset Management is to invest in unlisted company in emerging markets. And these are companies that have already existed for a while in the official sector. They're already generating revenues. Small and medium enterprise that need capital in order to grow and to make an even greater positive impact in the community and the environment in which they operate. Now, Sarona has been investing in these companies for the last 60 years. And historically, we have been investing directly into the companies themselves. More recently, about 2 years ago, we actually decided that we would be better served and our investee companies would be better served if we were able to gather more capital and distribute it more widely through investment teams that are located in the countries themselves. So we have launched 2 years ago a fund of fund, and the fund of fund itself invests and selects the best private equity managers in these countries, in Latin America, in Asia, and in Africa. They in turn will select and invest in the companies and then manage them actively in order to increase the value of the company itself, but also to increase the impact that they can have.
And is it successful?
It has been very successful. In fact, the reasons why we decided to go from a direct investment model to a fund of fund model was that over the last 10 years, several players have actually realized how successful the model is. And so there is more and more teams of internationally trained and highly educated people who are moving back to their countries of origin and starting local funds and investing. And so what we have seen is that we have been able to generate returns, both financial as well as in terms of impact that we have achieved. The financial returns have tended to be in the high teens, and in terms of impact, we are serving an increasing numbers of clients at the base of pyramid and generating employment, and we're actually sort of continuously developing metrics to measure the impact that we're having.
What's the biggest risk for this strategy?
The biggest risk for our strategy is really not being able to identify the funds and or the companies that are going to generate the returns, both in terms of financial returns and in terms of impact returns that we expect from it. So it comes down, we believe, to the ability to select and identify quality people, quality teams who will be able to implement the strategy from beginning to end.
In the field, you also meet NGOs. What do they think about this strategy?
Well, it's interesting. In the field, we meet a number of players, of course. Non-profit organizations or development agencies that focus on giving grants, we find that historically they have not had as much impact on growth as either they or the recipients would have wished for. We think that investing with a rigorous approach and seeking predetermined results is helpful for the whole community. On the other hand, we have seen development financial institutions such as FMO in Holland or the IFC or the EBRD who have had an impact investing approach, but again, with a very clear focus on achieving not just social and environmental returns, but financial returns. And they have achieved, and that is documented and visible, returns that are between 17 and 18% annualized over the last, I would say, 15 years.